founded by Solar Power Europe, Wind Europe, RE100 and WBCSD. And this is the first in an exciting new webinar series from Resource, covering all things to do with corporate renewable sourcing. So I'd like to start with a couple of housekeeping points first of all. And first of all, the order of the day. I will begin with a scene setting, and then we will spend the first half of the webinar discussing the topic with two experts, before moving on to the Q&A with questions from all of you in the audience for the second half. So during that discussion at the beginning, we'll touch upon many different points to do with this topic. So do make sure that you submit your questions so that we can delve deeper into all of those in the second half during the Q&A part. And you can do that by using the question panel on the right of the screen, so on the Go to Webinar panel. I know that the first question that always comes up here is whether we are recording the webinar and whether you will get a copy of the recording afterwards. So I can indeed share with you, yes, we will be, and you will receive that shortly. So first of all then, to introduce myself, my name is Lucy Hunt and I'm going to be your moderator for today. I work in the energy team at the World Business Council for Sustainable Development, or WBCSD, which is a global organisation of over 200 businesses working together to accelerate the transition to a sustainable world. And where I sit in energy in particular, we work with these businesses to increase understanding and use of sustainable energy solutions, and that includes corporate renewable sourcing and corporate renewable power purchase agreements, or PPAs, like we're talking about today. So that brings me round to the topic for today, which is PPAs, the impact of the pandemic in the short to long term, and opportunities in the current renewable energy market. And not only is that an incredibly long title, it's also a very big topic. So if you cast your mind back to earlier this year, when lockdowns were starting to be enforced at varying levels across the globe, I'm sure you all remember seeing the immediate shocks of rapidly falling electricity demand, also sinking electricity prices, in part due to the pandemic and in part due to other factors. Sudden restrictions for new build renewables as well, including barriers for site access, for example, and also importing materials for those sites. And we even saw news of force majeure being invoked on particular electricity contracts around the world as well. And so around about that time, I had many conversations with PPA stakeholders, and some of them were worried about the future of PPAs, particularly with a financial crash looming around the corner and not knowing how severe that would be. And to be completely honest, we still don't know that to this day. However, I have to say that the vast majority were confident. And that was particularly true for large corporate buyers who were still insisting that the pandemic had no impact on their long-term procurement strategy. And if we fast forward to the present now as well, that confidence from the buyer side is one that still has remained strongly in the most part. And indeed, a survey by the Climate Group recently showed that in spite of uncertainties and challenges presented by COVID-19, 97% of respondents reported that their long-term sustainability strategy remains unchanged. So a really nice, strong demand signal there. So now that that first uncertainty is clearing, we're looking more towards the medium and long-term impacts and opportunities. And that's what we're going to be looking at on the webinar today. So to begin with a few thought starters, there are many different questions which we hear cropping up in the PPA world currently. For example, how wholesale electricity prices may impact pricing, what impact perhaps government recovery plans will have, whether we'll see corporate buyer risk appetites changing, so particularly to do with price risk or even contract tenor. And if so, how can we create different models, whether that's PPA models or different corporate sourcing models, to better suit those risk appetites? We're also keeping a very close eye on how credit risk for PPA could be affected. So that really depends on the severity of the economic downturn. And finally, also some really simple factors like how do we keep up with the pace of deals, and how do we welcome in new entrants, which is really very important, without being able to meet each other, without being able to network and share information face-to-face in the normal channels as we normally would without COVID. So I was talking to Pexapark about some of these issues recently, as they support companies with corporate PPAs and also have a PPA tracker to track deals being signed. And you've all seen that this is a resource cooling webinar, so we're going to call in Michael Waldner from Pexapark to share some of those insights with us. And as a quick introduction, first of all, Michael is the CEO and co-founder of Pexapark, having founded the company 3 years ago to help renewables thrive in the post-subsidy markets. Pexapark provides software for PPA pricing and management and transaction services with more than 5,000 megawatts of PPAs advised. And a nice fact about Michael is that he closed his first renewable PPA 15 years ago, having previously worked at Expo Trading for 14 years. So let's call him in now.
Hey, Lucy. Hi. Great to see you.
Nice to speak to you. How are you doing?
Good, good. Still in the home office, but
indeed. Same here. And
cool.
Where in the world are you actually?
Zurich.
Aha, very nice place to be. And no more lockdown in Switzerland, right?
No, I think things are easing, but I think the situation just needs to be seen how it develops, I guess, as everywhere.
Yeah, indeed. Well, it's really great to speak to you today. So thank you very much for joining us on this webinar. I was just mentioning that Pexapark has a PPA tracker. So my first question to you would be, what changes have you noticed in the number of corporate PPAs being signed since the beginning of the pandemic?
Yeah, no, it's we developed this kind of price discovery and PPA tracker. So basically, people can report PPAs. And what did we see is basically in before the pandemic, so like December, January, February, like we had like 10 to 15 deals reported on monthly basis, and then in March, April, so basically this just came to a halt. So we had like 1-2 deals signed up. And now I think the situation is easing again. So we have like maybe 5-6 deals since in June that were reported. I think interesting is also like, I mean, why is that? Obviously with the pandemic, I guess there were like the uncertainty, I think, which was imposed on organizations. So first, I guess, just to organize themselves, but you also had, I guess, price disruption in the market, which I think if you look on we have this price tracker, but it was like 6-7 euros across Europe, I think, which were just kind of the blip with the lockdown. But now we also see kind of an easing again of these figures. So it's basically we are now back at similar levels than we had before the pandemic started. Kind of interesting.
Okay, and that's similar levels in terms of PPAs being reported, also being announced and signed, or actually that you're seeing the negotiations creeping back up to original levels?
I think that the number of PPAs that we see is still below, I guess, but what we see also with the mandates we do, so kind of things are picking up again. And I think that's obviously also due to the price levels that we see. So it's basically like we are on price levels before the pandemic, like prices which we had in February. And at that time, basically, projects were built and the PPAs were signed. So kind of the expectation is like if the price level remains on today's level, then I think that there will be just more PPAs coming on. So we see a lot of interest, I think, going forward, and also kind of organizations, they just kind of trying to build up capabilities, kind of to manage kind of this situation as well into the future. So I think that just more awareness of the volatilities of the risks attached to PPAs, I think that also has its good merits, I think, going forward.
Yeah, really interesting point. And many stakeholders have been commenting on these lower wholesale electricity prices. So as you say, they're now creeping up again. And there's been a lot of discussion around what this means for PPAs. So maybe you could elaborate a bit on what corporate PPA price trends you've seen over the last few months as well.
Yeah, I mean, it's basically like obviously corporate PPAs. Also, they are orienting themselves on market prices, or like utility PPA prices. So it's basically there's a market for that, which is very intransparent. So it's not there's not the price which you can transact. It's normally a structured product, if you want, which is customized to a specific asset, to a specific location. So we have a lot of differences between different PPA types. But I think in general, what you can see is like it follows closely the traded market prices, which is kind of more shorter term, and then obviously like the illiquid tenors, like if you go 3 years to 10 years, 15 years even. So it's like there's a lot of uncertainty, obviously, how these prices develop. And I think there's a lot of sophistication going on in modeling, in trying to assess like the probabilities of the outcome and to attach a price tag to these risks. And in the end, like corporate PPAs, what we see is obviously they just orient themselves very closely to this, since they're also in competition with utility PPAs. And I think in the end, it's also a question of the corporates, whether they are willing kind of to compete on these levels. And I think purely speaking from a theory, kind of corporate should be able to actually provide a better price than utility in most cases, since corporates, they would not need to kind of hedge the PPA in the market, since it's kind of a natural hedge with their demand they have. So kind of there's no rehedging going on and so forth. Whereas for utility, normally they would just be exposed to the market. So they would try to kind of hedge this exposure in the market. And since there's no kind of same product in the market available, they would just then need to hedge it with instruments that are available in the market. And so kind of there's a continuous rehedging going on, which has its price. But I would say like that's from what we see. I think things are recovering, and obviously to be closely monitored how the entire situation with the pandemic develops. Meaning, maybe another aspect, maybe that's I'm not sure you also discovered that with corporates, but we also kind of obviously the pandemic that has a short-term impact. So you have like a disruption of demand, but that's basically for this year, eventually trickling into next year. And then obviously it's a big question mark, and I think we don't have the crystal ball, but how will the future economy be affected by kind of this pandemic? Will really kind of just have a longer effect with economical crisis and so on? Then obviously also the long-term prices will be affected. If not, and if kind of the situation eases within the next, I don't know, recent time, then I think there's a good chance that the prices will recover again, backed by kind of stronger demand in the market. So we don't know. We don't know, obviously. So.
Yeah, of course. Of course. Yeah, thank you for that. A lot of different points in there. So for everybody listening, do chime in with different questions on the chat if you want to delve in a bit deeper to any of those points. But yeah, exactly. Forecasting is even more important currently. Yeah, so a really interesting range of points, and I think it would be great to have a supplier perspective on these price trends as well.
Absolutely.
Yeah, maybe we can call in Juan, Rivier, Abbad as well from Iberdrola. So Juan is the head of Boost for Growth at Iberdrola, which means that he is trying to help crystallize the planned growth in renewables of Iberdrola, a global energy leader, which is a major producer of wind power and one of the world's biggest electricity utilities in terms of market capitalization. So let's call in Juan and get his perspective as well. Ah, there we go. I thought you were going to leave us hanging there. How are you doing, Juan?
No. Oh, very well, thank you. Thank you for calling me.
Great, thanks. And whereabouts in the world are you?
I'm in Madrid. I'm based in Madrid. So I have a very sunny day for the moment, as usual.
Oh, lovely. Well, we've all sympathised with Spain on the lockdown measures, so I'm very glad that you're able to now get out and enjoy the sun. It looks like you're back in the office.
Yes. We are, well, as you know, Iberdrola, I mean, as an energy provider, we're a strategic company within the country, and we had, even though we worked from home for quite some time, we were always able to come to the offices because we need to keep the lights on. That's important for everybody.
Indeed. Well, thank you very much for joining us today. So we've been talking a bit about PPA market trends and the impact of fluctuating wholesale power prices on PPAs. So it'd be great to get your perspective as well from the supplier side. So maybe if I could pose a first question to you, which is, are the reduced wholesale electricity prices really equating to signing corporate PPAs at lower prices, in your opinion? Or indeed, what other challenges are they throwing up? And if I may as well, to add on another point to that, if you could add some comments on how LCOE or levelized cost of energy plays into this as well.
Well, that's a very good question, because I've been asked a lot during this lockdown, also a lot of customers. Well, here, and of course, I mean, although Iberdrola is a utility here, I'm here talking about selling PPAs. Okay, we build a lot of renewables, and so we are here. I'm talking here as a developer. And it's true that when I come to sell PPA, and usually PPAs, which means additionality, where the customer wants to see a difference and wants to see a new installation coming online. Well, the wholesale price is one more reference, basically for the buyer side, but for the seller, the reference is, as you say, exactly the LCOE. So really the cost of the installation itself. Actually, it's important when we talk about long-term PPAs, 10 years, even 15 years or something like that. I mean, I think that the only reason why we can talk about those 10, 15 years PPAs is because behind we have a renewable facility with a stable LCOE. So that's the reason we have. I mean, if we were in the market, we were just trading linked to the power prices, I don't think you will find anybody closing any deal at this such term. So really, we have to think about we have 10 years deals because we have an LCOE of a power plant behind. Okay, I think that's very important. And when we have that, I mean, if the LCOE of those power plants, and we have seen that the cost of all those renewables are going down with the time, and then they have crossed the power price curves and begin to be cheaper than the power price, then you have a lot of opportunities, because we have the sellers ourselves willing to close a deal, a long-term deal, just above our LCOE, and it's also a win for the buyer who sells below their expected market forecast. So that's great. When it's the other way around, then of course it becomes a challenge, because we need to find a common ground between what the seller wants and the buyer wants. This is just a very important thing. But still, another point I want to make here, and this is something that also I keep telling customers and buyers, is, I mean, we're talking about a long-term deal here. I mean, this is 10, 15 years. I still think this is a very good hedging tool, so it gives stability. And of course, we're talking 10, 15 years. I mean, in 10, 15 years, we're gonna have events that are gonna bring the price down, like we've seen now with the pandemic. I mean, this pandemic has been very special, of course, but we'll have some other, price disruptions. But I want to say that those price disruptions are going to be up and down. So this time it was down, it can be up, and I see them as some sort of short-term events that do affect. I mean, I hope we won't have another pandemic. We'll see events coming on, and in the same way we have now a blip, we're going to have a surge in prices at some point. And if you have a PPA, that would be great from a buyer perspective. So I think we really have to think about long term. And in my case, I don't see things changing a lot in the long term for the time being. I mean, the pandemic is not a shale gas or game changer for prices long term. So I think we can still play with the same rules and the same view in this long term. Okay, and actually I think corporate PPAs. On we are looking, of course, to corporates, so to sell to our clients what they need and what they want. I still think this is a very good tool looking forward in terms of product stabilization and being part of the energy transition.
Great, thank you very much, Juan. Understood. And maybe if you could clarify for the participants as well, then, so you were talking about LCOE and that being particularly important from the supplier or utility perspective. So have you seen the LCOEs of different renewable energy technologies being impacted during the pandemic as well? Sorry.
Yeah, that's the point. I mean, if you look at, I mean, pandemic has taken the power price down, and so everybody, hey, give me a lower price then. And the question usually never liked, I mean, the customer never liked my answer was, hey, if anything, the pandemic has increased my costs because I have disruption in the supply chain, I have delays, I have problems permitting. I mean, we've been working, we've been putting into operation some plants. We've been working very hard in the pandemic. But still, I mean, this is a worldwide impact, and we've seen some delays. We've seen some issues there, especially in permitting. I mean, anytime you depend on the administration, has been some delays there. I mean, once we were on our own and we were just building it, we have been able to keep the pace mostly in all the pandemic. But I mean, all these things means maybe higher LCOE, and more than that, maybe some higher uncertainty on the moment when you can reach COD, and this always has some impact in terms of cost, but also in terms of relation with the customer, where of course, I mean, customer wants its product in time, whenever. So it's really important to have this on board to see how this affects the renewables landscape.
Yeah, okay, understood. Thank you. Michael, maybe do you have any points to add or reflect on that?
I think one point, Juan, you made, like on the volatility of the market with the pandemic. So that's also like if you go back 5-10 years on the volatility, you just take a particular market, but you will see kind of that the volatilities are not unusual high for the pandemic. Like there's other events in the market which you had before, which showed similar volatilities, and basically these uncertainties, I think they are inherent to the power market. And basically, obviously, as a renewable investor or also off-taker, you play in the exactly same market. So it's not something, obviously now it's special with the pandemics, a lot of awareness. I think that's also beneficial to the industry in my view. So just create a bit more awareness and then also see kind of how actually to deal with these uncertainties. So it's, I mean, in the end, you also said like, the prices are now low, so let's close a good PPA. But in fact, I think it's more complicated in the end. So you also need to be prepared to act on these situations. So you need to be, I mean, just because you see a low price on the screen or it's told in the market, that doesn't mean that you're able to close on these prices as well. So I think you need to prepare yourself. And I think that's just, in my view, that's a great chance for the industry, basically to build up these capabilities. Since in the end, I think it's not something like, okay, you have a very well sophisticated one part and then the other part is just like, okay, let's just close a PPA. But I think if both are on the same levels and have the same understanding of the risks and actually that then you will just close more and more PPAs, I guess, and that's the basis of this transparency and the knowledge also in the industry. And I think that's what we also see in the market that's kind of building up. So I just believe it's a good momentum that we see, and eventually the pandemic just accelerates this. So I would rather see the positives. And,
I like what you said. I mean, for me, closing a PPA with the customer is really understanding exactly who keeps what risks. Of course, the price is part of the deal, because when you close a price, you are just setting up who keeps the price risk on top of that or below that. But it's also a lot of other things. So for me, a PPA is a risk sharing agreement somehow. Okay, so especially when you are trying to make an installation being invested, so coming out of the ground. So that's it's an adventure. So we have to put that there. We put some money, and we are just part of the transition. But when you do that and you put all the money there, you have a very long-term risk that you have to manage, and it's very important to really share it and to see also how I see it is, okay, which part is able to manage better what kind of risk that is on the table, because at the end the risk is going to stay with the buyer or with the seller at some point. So it's really where does those risks sit, who is able to do that, and to keep it for the long term. Here it's very important to people usually don't understand what it means. 15 years. 15 years is a lot of time. So we really need to take this into account, because things are going to happen for sure in those 10, 15 years period. A lot of things are going to happen. It's not something that's going to happen just for next year. It's 10 to 15 years.
I agree. I think also if you close a PPA, then it's not just like I close PPA and off the table, that's it. But I think you constantly need to monitor on the PPA how it develops. I mean, the PPA itself, like the price levels, but then you also kind of just the other side of the coin is the credit risk, if you want. So you just exchange basically the market risk against credit risk, and that just needs to be monitored, and depends obviously how you structure your PPA. Then you may or may not have measures also now in the as with the pandemic to that your PPA basically weathers the storm, and it's not kind of it's not tried to be contested and say, okay, let's renegotiate the PPA, since that obviously could lead to serious damage to one or the other side. I think I'm sure your experience on that side. Do you see a lot of I don't know, renegotiations or on your portfolio? Do you see kind of certain events happening, or?
Right. There's always for us. That's also why it is very important to really make the customer come online with us to understand what means the deal, because for us the deal is really long term, and we include in the PPA. I mean, I understand as everybody strong clauses to keep the PPA alive, because what gives sense to this PPA, the reason why we can set it at the LCOE instead of the power prices or whatever, so it's because it's long term. So it's inherent to the PPA in itself. If it wasn't long term, the prices wouldn't be the same. You couldn't talk about LCOEs, you couldn't talk about stability, you couldn't talk about investment, you couldn't talk about additionality. I mean, you couldn't talk about basically 80% of what the PPA means. So the fact that the PPA has to remain in place for this term is absolutely crucial to give sense to this PPA.
Absolutely. It's also, I think normally sellers, they have, I mean, you will be asking for bank capital like that to finance your projects, and I think then obviously you need to secure kind of certain levels of cash flows with the PPA. So maybe just looking abstract into a renewable investment, you could also say you invest into future cash flows, and then basically the PPA is just a tool to structure your cash flows that basically fulfills then your investment. Maybe that comes a bit with less emotion than the renewable, but I think that's also something which happens in the back. Obviously, if you finance a project, you look at exactly kind of these cash flow distribution, the risk attached to it, probabilities of the outcome, so that in the end, like all the parties feel that's kind of a good deal for the threesome.
Indeed. And I'm really enjoying this conversation. It's great. I mean, there's nothing for me to do. You can just have a chat between yourselves. But yeah, I'm sure we could talk for hours, but I want to be sensitive that we have lots of questions coming in, and I want to make sure that everybody has enough opportunity to ask their maybe deeper questions about particular areas. So yeah, thank you for your insights there. To everyone listening, I mean, I really hope that those insights have started to answer some of your questions already, but also that they've maybe triggered some new ones. So do keep pasting questions into the question panel on the right-hand side of your screen. And I know that GoToWebinar normally reduces this down, so it can sometimes be hard to find it, but you should be able to see a minimized panel on the top right. So if you click on that, you will find it. So Michael and Juan, are you ready for some audience questions? Yeah.
I'm just trying to look.
Yeah, but they'll come through. So in terms of the technology, I can read them out. So I'll pick a few which I think are particularly suitable for both of you.
Yeah, sorry, I've seen a question here that says about the different long-term view about the expected prices to go up and down. Is this the one?
Yeah, go for it. So I'm just looking at the questions now. So why don't you start off by answering that one? If you could read out the question quickly, so that everybody.
Yeah, somebody here that asked for says two parties need to have a different view about the risks in the future. Example, imbalance buyer expects prices to go up and the seller expects the price to go down. Not necessarily. I think what we have to do to reach an agreement, as I say here, I mean, PPAs is not only about power prices. I mean, it's just been part of an installation, of being part of the energy transition, of being part of the solution, not of the problem. So here, when we talk about prices, of course, you're going to compare the LCOE of the power plant with what is your expected view of power prices in the long term. And you still need to see that you are not completely out of the market. And of course, when you see power prices in the future, is just a bet, just something that can happen, go up and down. And one thing I can tell you that I know that everybody is going to be wrong. You don't know what's going to happen. Okay, you're going to have huge models. We have, I mean, as a utility here, we have a whole team looking at long-term price forecast, and we have our own view. But basically, at the end, we know that we're going to be wrong, sure. So we need to have something there. So what brings here a PPA and installation is just certainty, stability, and of course, you have to accept this stability in terms of buyer. So you need this amount of this price you're gonna set for 10, 15 years. It needs to make sense for your business somehow, not to make something that if the power prices go very well below, you're gonna be really in dire straits. So that's important to understand, because you're gonna be there for 10, 15 years with that. So and that for us also as a seller is very important. If this becomes a problem for the survival of the business, then we have a problem as a seller also. So it's very important to have something there. It is not only about those prices. We can have the same expected price evolution, and we'll find a perfect common ground. So we don't have to have diverging prices, something like that. I hope I've answered the question.
Me on my side, like just an interesting point you raised is on the, I think the forecasts are anyway wrong. I think in the end, that's eventually not or like the point for entering a PPA is, I think, not to be right or wrong. Since otherwise you eventually, if you have a forecast, you just leave it open to the market. So you speculate on that your production will realize at the forecasted price. But I think it's really about like talking then about risk return profiles that you would like to achieve with your investment. And I mean, the PPA is just, I mean, it's a hedge for certain risks. And I think to be not surprised and really structure it to your desired outcome, I think you just need to uncover all the various risks, being it from obviously the flat price risks, which is kind of the obvious, which we discussed, but you also have, like, I think you mentioned balance risk, profile risk, you have a cannibalization risks later on. I mean, it just depends then in the contract, the PPA, have you hedged them or not? How will your position evolve over time? And I think that's basically the structuring then of the PPA. So it's, as you said, I think it's not just about price, it's about structuring the PPA and then also kind of having a full understanding of actually what you have entered with the PPA. Not that kind of later on, years down the road, you will be surprised by, oh, okay, I didn't know, I thought this risk was covered, but it's actually not. I think,
I fully agree with the risk assessment. It's really a risk sharing tool. I see here another question about, I mean, it actually very much in line with this risk analysis. The question is, what financial instruments and from whom do you see becoming available for buyers that want to aggregate demand across several countries in a PPA to deal with basis risks? And this is asked by Under Several Cools, sorry for the name pronunciation, and Altenex Energy. Okay, I mean, something very important to understand is that the risks are there. Okay, so if you sign a virtual PPA cross-border, you're gonna have the basis risk. The question is, where do you assign it? It's not gonna disappear. So whether one side keeps it or the other side keeps it, I don't see. I mean, the only way to really take out this risk is really to go. I mean, the basis risk, of course, here the difference in price comes from the congestion between the two countries. So you have capacity for the network, and if the network just is saturated, you cannot connect both of them as you want. Then you're gonna have a price differential between both countries. There's just two ways of dealing with that: building more network or getting your renewables PPA with the country where you have the same demand. So it's going to be hard to do something else. Of course, you can choose. What people usually do is just try to choose the place where the LCOE of the power plant is the lowest. So you can have, at the end, as I say, a PPA is LCOE based. So even if you are in the same country, if you are LCOE based, when you talk about 15 years, you still have a risk between what is the LCOE is going to be stable for 15 years and the power price is going to go up and down. So if you go to another country, you basically have the same issue. You have a fixed price and something going up and down. So it's just a question of where does the fixed price sits in comparison to what you see your own costs. So you go to the cheapest country, that's the best you can do. That's it.
Yeah, exactly. And maybe just to clarify before you jump in, Michael, so for anybody who might be a little bit in this conversation, this is one that's coming up a lot recently. So on cross-border PPAs, how you can maybe put together a pan-European contract where you're sourcing renewable energy in one country and then actually off-taking that load in another country. And we've only seen these being structured virtually, and so that's why this basis risk discussion comes up, because if the prices in the two geographies aren't moving in tandem, then it creates the risk for either the buyer or the developer, depending on who is taking that risk. And in terms of physical PPAs, because of interconnector trading issues, we've not seen any so far, but we're interested to see how that will develop in the future. Just as a clarification. Michael, would you like to respond and add to that as well?
I think you just made the point. I just thought like on the, it's basically you have, if you have demand in one country and then you close a supply in another country, so you're just exposed obviously to the price spreads of these two countries. So you have basically two exposures. And I think your hypothesis then is that the correlations, they will hopefully maintain throughout the life of the contract. I mean, otherwise you just could also be in a situation where basically the whole exposure or the two contracts actually go sour, and basically you have kind of losses on both ends if the correlation breaks. I mean, we had just to make this explicit or like a bit more visual, like in the past, like you had oil and gas markets that was closely linked. So in gas contracts, you had like oil price formulas to price the contracts, and the link was very, very strong. And in a certain time, then the link was broken, and so basically you just then end up with two exposures which are not moving together anymore. So basically, what you do is just increase your risk instead of kind of decrease your risk. I mean, in the end, you just need to be aware of that, especially if you have this basis risk. I think my advice would be that you closely monitor that. And then the question is always, are you able to act kind of on changes? And I think that there was a point where a question was brought in. Are there any financial instruments or any instruments to manage these positions then? And I would say yes, of course. So you would be able to structure such instruments, means bespoke agreements then. I think it's not something you eventually will find on the exchange, but I think you would be able obviously to mitigate such risks if you find a player that's taking them on. So, I mean, in the end, I think it's just a question of what you would like to achieve. I mean, it's like, as you said, Juan, like if you invest in a country with the lowest LCOE, obviously then you will have a position in this market, but maybe that doesn't correlate with your home market where you have the demand. And depends then on the purpose of the PPA, whether it's basically to enable more renewable production and how companies or corporates are putting these together. So are they okay kind of in having a portfolio like on European level, or are they more kind of we would like to have it physically delivered? So kind of that's our requirement. Maybe Lucy, you know more about kind of the corporates and the way how discussions are currently ongoing on this topic. That would be very interesting.
Yeah, indeed. So we're actually putting together a paper as WBCSD and in collaboration with the resource platform on border PPAs. So we're really looking at what these impacts are from the corporate buyer perspective and what some of the tools are to then manage those that you've mentioned. I would say one other important point that's coming up a lot is accounting issues with geo accounting. So making sure that that's all set up correctly so that there's no risk of double counting, etc. When you're procuring in a different country, so therefore you're not actually receiving the delivery of the electricity itself. So yeah, a really interesting conversation. I'd like to give you maybe a little bit of a light relief and go to a more straightforward one now, which is, where is the synthetic PPA market? So for everyone on the line, synthetic virtual partial PPAs are all used synonymously. So are you seeing that growing in Europe, or are there particular barriers as well, somewhat to the cross-border discussion?
I mean, maybe just a perspective from my side. So like it's I think if you talk virtual hybrid or whatsoever the names are, but it's basically just a financial settled PPA, and in the end not much different from the physical. But I think since you can, I mean, that will also be settled in the end financially with the cash flows. I think eventually the challenge will be on accounting, as you just mentioned before, with the financial physical settled. So there's a different treatment of these contracts, and I think that's eventually the reason why I think many companies, they switched at least to the mandates that we work on. They switch to physical PPAs, since that creates less questions on the accounting side. But there's maybe other reasons. Not sure, Juan, you have some thoughts on that side?
Look, here we really try to make our best to fit what the customer wants. Basically, we do everything. Although we tend when we talk about risk and everything, we usually tend to assess the customers really to reach an agreement for physical delivery, because this way, anytime we can, we work on physical delivery because we think it's better understood for the customer, so they really know what they are getting. And actually, sometimes also it's also a question of, do we sell the energy as generated or as consumed, or even baseload, of course, which is the middle point. And we usually this is again a risk sharing analysis. It's very important to talk to the customer about that and to make them aware of what they are signing into. And sometimes a lot of customers signed an generated agreement, and they actually doesn't understand what are the risks involved in the long term. Especially, everybody has heard about the duck curve in California, or even now in Germany in summer. But this is a reality, and people is just trying to look at that now when some PPAs have been signed quite a few years ago, and it's like a big surprise for some customers. I think it's important that the customers feels comfortable. I understand. For us, it's very important that the customer understand what are the risks, not only today, but for the 15 years contract. Because for us, it's really a long-term relationship that we're gonna build there, and we want to have the customer happy, not only today, but also during the 15 years. So one way that we provide that as a utility, of course, is that, hey, this is renewables, and if you buy as generated, you're gonna keep a huge risk in terms of profile. You may not see it today, but you can see it in a few years. And so maybe we can reach an agreement about the price of the energy baseload, which is a very good middle point for sharing the risk between the customer profile and the duty or the installation generation profile. I think that's very important to understand those risks. As I said, for me, really a PPA is really sit down, talk about what it means, what are the whole risks that we're gonna face during the whole 10, 15 years, and really understand when you're gonna have positive and negative cash flows coming from the PPA. And if it's physical for us, it means more sense, but that's because we are a utility and we are customer oriented. So we really do that to provide our customers with energy. But of course, if the customer wants financial, we have no problem with that. But anyhow, it's just a question really understanding at every moment what is going to happen.
Mm-hmm. Great, thank you. And maybe keeping on the subject of trends and what we're seeing in terms of corporate buyer interest, I have a question here about geographical variations. So the question is, what has been the impact of the crisis in the short and medium term on the appetite of PPAs across different geographies? Essentially, where have you seen things pick up, maybe where have you seen things fall back? Different geographies across Europe.
Maybe on my side, what we also provide, everyone can also access freely. So we just created PPA price indices, which are updated on a daily basis. So basically, that just gives you a first reference point of where the market goes. And there we have different geographies within Europe, regions from France, Great Britain, Germany, Nordic, Spain, Italy, and so forth. We also track it on European level. And I think that just gives you a very good idea actually where prices go. And I think it's I think some regions have been more affected. I think on the short term, so that's kind of bigger variation. Some others, I think they just did see kind of smaller price variations. But I would say across the board, if you look entire Europe, so most regions they have, as in the beginning, recovered again to level before the pandemic. And then, but what you see if you look at the long-term min and max for on a yearly basis, you see basically that the price decrease started already like last year, so on the market, and basically now with the pandemic, I think that there was a break, so kind of prices increase again. But it's like pandemic, as also Juan said, like it's just one event. So kind of the market is also, if you're active in power market, that's influenced by the other fuel stack and by macroeconomics as well. So it's like a entire universe of aspects that eventually would need to follow to understand where the prices go. But I think in the end, like across the board, I would see like things recovered again to pre-pandemic levels.
Just to add something there, when I think about different geographies, what I see is three main references that helps or undermines the signing of PPAs, which is, of course, first of all, what we talked to here, which is the power prices. So there are differences between countries that we see in the long term. The second part is how cheap is to build renewables, which is the other side of the coin, of course, depending on their resource, the wind resource or the solar resource. You have different LCOEs and different needs from the sellers to make it fly. So that's the second part. And then the third part is just some barriers, issues, or problems that may undermine some possibilities, sometimes specific rules on, I don't know, how the CO2 emissions are treated for certain customers are an issue. To close a PPA, because the renewables PPA has an uncompetitive advantage, even if it sounds strange sometimes, because of the regulation has always secondary effects. Thing that you put there, they think it's a good idea, then you see that it just undermines another path like the PPAs, corporate PPAs. So some countries have some other issues that could delay some PPAs.
Mm-hmm. Great, thank you. And maybe, I mean, you mentioned regulation there. So if we could end on a question on government intervention, possibly. So we have a question here on how do your respective companies feel about EU's Green Deal? And maybe if you could particularly touch upon any opportunities that you're seeing come up as well through the EU recovery plan that's being negotiated at the moment.
I can begin if you want. I mean, for us, I don't know if we're gonna have instruments. I mean, for us, of course, as a seller, one of the main issues is the base of our counterparts, and the pandemic, of course, means I think we have mentioned before, the credit risk of our counterparts has increased dramatically during the pandemic, or we can put it in the other way, as our possible counterparts have shrinked dramatically. So a part of helping there will be great to see how we can just manage to have those to keep the potential counterparts in place there. That would be of course great. And for us, I just want to say that being part of a PPA deal now with the recovery is not only being part of the energy transition, which was already the case before the pandemic, but it's also now you can claim to be part of the economic recovery, which is one thing that all the Green Deal and everybody has just said we have to recover, but we have to recover on a sustainable way. So those jobs, those deals, everything has to last. and it has to be green oriented. I mean, there has been an overwhelming agreement there, and so here you have an opportunity to claim being part of this economic long-term economic recovery on top of the energy transition. So I think I'm sure that renewables are gonna maintain the growth, and I'm sure that the corporate PPAs will be there and need to be there, and there is a huge opportunity for them to still be there.
Great, thank you. And Michael, a quick comment from you as well.
I think it's in the same way as Juan. So it's I believe like it's a great way and timing to kind of connect the recovery with the renewable side. So I also believe there will be lots of opportunities going forward, and it's basically a backing of the industry. And I think the backing is there. I think in the end, it's then again like, will you be able to act in this market? I mean, it's like one is the politics with the support, and the other is then kind of the market, which you kind of just need to build up your skills, capabilities to deal with this. But I think it's to me at least looks very promising, and I think it's a great sign from politicians again.
Great. Well, that's a very good note to end on then, if we're looking at the positives. Sadly, I'm looking at the time, we've got sort of 3 minutes, so I think I'm going to bring the webinar slowly to a close. As a short summary, today we've really heard from 2 excellent experts in the sector, so thank you very much, discussing PPA topics ranging as far and wide as PPA market trends, pricing opportunities, pricing challenges, LCOE, geographical trends, credit risk came up as well, and we even touched on some of the recovery plan thoughts as well. So lots of different discussion points today, and the conversation isn't ending here. So if we can move on to the next slide, you can see that Resource is putting together a whole series of webinars to keep you entertained during the summer and beyond. So some of the upcoming topics are listed on the screen in front of you there, and make sure that you sign up to the Resource mailing list by going to the website to the bottom right, so that we can keep you up to date with all of those. So all that remains for me to say is really thank you very, very much to our 2 guest speakers today, Michael Waldner from Pexapark and Juan Rivier Abbad from Iberdrola. Thank you for your time.
Thank you, Lucy.
Thanks to you, Lucy.
Brilliant. It was really great to talk to you. And thank you all also to everybody who's listening in, also for your active participation. So it really has been a pleasure to talk to you all. I hope that you enjoyed it as much as I did, and I wish you all a lovely end of the day. Thanks very much, and bye for now.
Thank you, everyone. Thank you very much.